Alright, so in this episode, I will be going over very specific rules for each of the patterns I showed you guys on the last episode. So this for all you guys, I want to get down to the nitty gritty of things. Alright, so let's start off with impulsive and corrective waves. I think this is more, well, yeah, this first one's really more impulsive stuff. So for diagonals, you have rising wedge or falling wedge patterns, can also be observed in the context of Elliott wave theory. Impulse waves typically occur in the 1, 3, and 5 waves of a larger degree wave, while corrective waves like zigzag or flat occur in the 2 and 4 waves. The A and C legs of a corrective pattern are typically impulse waves. Wave 2 cannot retrace more than 100% of wave 1. If it does, it's probably not wave 2 and the count needs to be reassessed. Wave 3 can never be the shortest impulse wave among waves 1, 3, and 5. It is often the longest and strongest wave. Wave 4 typically does not overlap with the price territory of wave 1. If it does, it's probably a part of a complex correction. So again, for a refresher, let me just open up what this would look like. Alright, so a shout out to Elliott Wave Monitor for this. So as you can see, you have your leading diagonal, 1, 2, 3, 4, 5. As you can see, wave 5 ends here and then goes down to finish the corrective. So again, this can happen anywhere. This can happen in your impulsive or corrective waves. As you can see, you have it forming on wave A from ABC. 1, 2, 3, 4, 5. Finally finishes the impulsive leg of corrective wave A, and then down B, and then up C. Right? Not that hard, nothing crazy. Either way, no matter if it's expanding or contracting, you're still going to buy or sell. Like, the only thing that matters is that you get your wave count right. That's really the only thing that matters. So now you have the zigzag pattern. Zigzags are measured in 3 legs, A, B, C, 5, 3, 5 sequence. Wave A and C contains 5 subwaves inside each leg. Wave C often extends to a Fibonacci level from wave A. Use the fib extension for this. The most common targets are the 100% or 123.6%. In other words, the 1.236 in your fib level, with a 138.2%, the 1.3882 fib level, 161.8%, your 1.618 level. Wave B contains 3 subwaves inside the leg. Wave B of the zigzag cannot retrace past the beginning of wave A. It usually retraces to 0.236, 0.38, or 0.78 fib level starting from wave A. But really all you need is for wave B to barely tap into it, which would be the 0.1 or the 1% or whatever of wave A. Now let me open up an example. So again, this is what it would look like. You can use your fib levels to figure out where it's going to retrace or how far it's going to extend. Personally, this is why I didn't include it here. I could have, but I'm not, because I don't want people focusing too much on figuring out how far corrective wave B or C is going to end or begin. I already showed you guys how to use the Fibonacci tool. You guys have to try it on your own. If you want, join the Discord, send me your pictures, send me some screenshots, and I'll take a look at them and verify them for you, or tell you, hey, this is kind of how it looks. It looks right. It doesn't really look that good, whatever. But point is, I don't want you guys focusing too much on trying to calculate these corrective waves so much. I don't like trading corrective waves that much. It's pretty dangerous. I'll do it every now and then if I get an A+ setup. But you yourself, do not worry about it. Please don't do it. So now we have part 2, regular flat correction. Before I keep going, ladies and gentlemen, this is really just further adding on to the previous episode. You can use these specific rules as a quick look at reference for when you are marking up your waves, okay? Just wanted to clear that out. This pattern subdivides into a 3-3-5 interval wave pattern. The rules are: wave A has 3 inner or subwaves. Wave B, it goes up or down depending on the trend type, but not higher than the start of wave A, and also has 3 inner waves. Wave C generally terminates slightly beyond the end of wave A and has 5 inner waves. Expanded flat correction. This pattern also subdivides into a 3-3-5 interval wave pattern. The rules are similar to the regular flat correction, but in this case, Wave B exceeds the start of wave A, and wave C ends beyond the end of wave A. Running flat correction. This pattern also subdivides into a 3-3-5 interval wave pattern and a running flat. Wave B exceeds the start of wave A, but wave C fails to travel its full distance, falling short of the level where wave A ended. Remember, these patterns can appear in any corrective position. They usually target the 50% retracement level of the previous move. So let me show you again another example of how this looks like. Now, as you can see, the overall trend is marked with the red lines, right? So A, B, and C. Inside those waves, A, B, C, A, B, C, and then finally you have 1, 2, 3, 4, 5, right? And then again, I included a picture of this from the previous episode. You can look at them if you want. I'm not going to go over them because you should already know this. But yeah, as you can see, wave C finished slightly beyond wave A, but it won't always do that. It might just be a wick. Okay, who knows? But at this point, you should be able to read this. All right, you should be able to read this. Now we have triangles. So corrective structure labeled as A, B, C, D, E usually happens in wave B or wave 4, subdivided into 3, 3, 3, 3, 3, 3. RSI also needs to support the triangle in every time frame. Don't matter in my opinion though. I don't care about RSI, man. That's up to y'all. Subdivisions of A, B, C, D, E can either be A, B, C, WXY, or flat. Don't worry about that either, man. That's just doing too much right there. That's for all y'all dudes that are trying to do too much, man. You ain't got to do all that, bro. Now, before I show you an example, let's talk about double threes and triple threes. At this point, you're just doing too much and focusing more on patterns rather than price action. I stick by that, man. So again, here are your triangles. You have your contracting, you have your descending or barrier triangle, and you have your expanding triangle. And then again, it's made up of overall larger waves. So here you have your A, B, C, D, E, and the overall higher time frame. And then inside your higher time frame, you have A, B, C, A, B, C, A, B, C, A, B, C, A, B, and C. And again, these waves are found inside of these right here. These waves right here. A, B, C, A, B, C, A, B, C, A, B, C. Right? 3 inside here, 3 inside here, 3 inside here, 3 inside here, 3 inside here. 3 inside all of these things right here. And this one, this A, B, C, D, E pattern. And this one, you have 3. A, B, C, D, E. You have 3 in all of these impulsive and corrective waves. All right? Hopefully that's not too confusing there. Now I wanted to include this portion, this last portion here for this episode is, do patterns even matter? Again, I want you to take a look at all these patterns here. What do you notice? What is the one thing you notice? I'm going to give you one tip. It has to do with entries. I'm going to give you a couple seconds here. Think about it. All right, did you guys get it? If what you noticed was that no matter if it's a zigzag, contracting, expanding, whatever the heck it is, it does not change the fact that you're going to enter for a buy or a sell position. Same thing here. You have A, B, C, D, E, right? A, B, C, D, E, A, B, C, D, E, A, B, C, D, E. They're all doing some kind of wedge, some special little shape here and there. It does not matter. You're still going to enter for a sell. The only thing that changes is whether you're in a bullish or bearish corrective wave or bullish or bearish trend. That is it. That's all you need to know. It does not matter if you have a specific pattern like a zigzag or a flat or an expanding running flat. It does not matter. You will enter for a buy or a sell either way. So please don't think that you have to refer back to something like this and say, okay, what pattern am I in? Is this a triangle? Is this an expanding? No, dude, you don't have to. Not unless you're doing something specifically like you see liquidity getting taken out, then maybe you have to look for a specific flat. So just to make sure you're in the right one. But even then, that doesn't even matter because most of the time price is consolidating either way. So just be very wary about that. Be very careful about it. You don't have to make sure you're in a specific pattern. Just make sure you're marking up your A, B, and C's right, or your A, B, C, D, and E right. Okay, that's all you have to do. Just make sure you mark that part up right. Now I'm gonna actually try finding you an example real quick. I didn't actually include it into this presentation, but I'm going to try finding something for you. All right, so here you have what looks to be a barrier triangle, right? You have your A from here, A, B, C, D, E, A, B, C. What do you notice? You're going to enter for a buy no matter what, whether it is that you entered it from here. Hold on, give me a sec. From here, and you use your fib extensions for targeting your take profit, or you enter on this one right here. Once you see that engulfing candle, right? So you put your stop loss here. Maybe you were targeting this imbalance, or maybe you decided to enter at the pullback, which was right here. Whatever, doesn't matter. Either way, you're entering for a buy. So that's what I'm saying. It does not matter that you have a specific pattern. It doesn't. You're still going to enter either way. Just make sure you're marking them right. A, B, C, D, E. That's it. That is it. All right. So hopefully that clears that out for you. I know I repeat myself a lot in this series and in these episodes, but it's just for you guys to ingrain it in your head. Okay. I need that to be ingrained in your head. All right. I'll put this in the presentation for you guys so you can look back at it. But yeah, guys, other than that, that's all I have for you. God bless you all. Take care. And I will see you guys in the next one. Join the Discord. Send me your Elliott wave markups. All right. Let me take a look at them. So anyways, guys, talk to you soon. Peace.